much for taking the time for the second Realistic Optimist event. We had the Sturgeon team last week to speak about Central Asia. We have you this week to speak about Pakistan and the Pakistani ecosystem, and more importantly, everything we've seen for the past 5 years, ever since that 2021 funding boom. Um, Before I give an introduction about the Realistic Optimist, how about you go ahead and give an introduction about yourself, i2i, what you invest in, and then I'll dive right into questions.
Sure. Thank you so much for having me, Tim. I'm Kalsoom or Kals. I'm the co-founder and general partner of i2i Ventures. We are an early stage venture capital fund that's been investing in startups and founders addressing Pakistan's largest problems since late 2019 is when we started first with an SPV and then our proper fund one. So we've been investing for about almost 6 years now at this point. Investing early, pre-seed and seed stage, and agnostic sector-wise, but most of our companies, about 30% of our portfolio is fintech. And I would say that if we were to include embedded finance, that's about 60% of our portfolio has that. So I think that's interesting. I've been part of the Pakistani startup ecosystem for about 15 years now, so since 2011, so about 14 years. Prior to launching the fund, with my partner Misbah, I was a solo founder and started an organization called Invest to Innovate, which is still an active player in the ecosystem, which has been an ecosystem builder, accelerating startups, and then also providing benchmark research on the startup ecosystem since 2011. So really that work itself and that front row seat of building startups and working closely with founders really led to the thesis around the fund and really kind of giving me a really interesting perspective now as an investor. So while I don't run Invest to Innovate anymore, I'm still on the board of it, but and that's our sister organization. I've now fully been on the fund and investings for the last 6 years.
Awesome. Thank you for that. Before diving into the questions, a small introduction to the Realistic Optimist. So we are a paid publication covering the global startup scene. The best proxy we found so far is building the Financial Times for the global startup scene. So the professional premium publication making sense of this new economic sector in all of its global nuance. Our paid subscribers today include wonderful teams at i2i Ventures, but also Sturgeon Capital, 500 Global, InDrive Ventures, Goodwell, Razor Capital, and we're also piloting with a Ivy League university I cannot name, but it's going well. The first question I had for you, Kals, is pretty specific, but we wrote an article recently with SafePay, which I think is one of your portfolio companies. And they were speaking, one of the questions was about Rust, so Pakistan's instant payment system. That similar infrastructure, which is government-led, has had massive impacts on the Brazilian ecosystem, on the Indian ecosystem. Can you talk to me about what Rust is? And in the context of fintech startups and even startups more broadly, what impact is it having? And do you think it's going to have on the ecosystem?
Yeah, I mean, if you think about, and I think exactly what you said, right? The reason why the Brazilian fintech space is where it is really because of their instant payment system Pix, right? And creating that like infrastructure for payments. And for Pakistan, Rust has kind of been in the works for a number of years, and it's been going live now for a bit. But now that it really has, and companies that are leveraging it are going live with it, it's really kind of allowing interoperability, which I think is really important because when you think about payments, it's, before Rust and before these payment systems infrastructure existed, it would have to be like bank to bank, like the same bank, right? One to one. This allows many to many, which I think really opens up the landscape. It allows for peer-to-peer payments much more easily, instant payments. So I think the fact that like it just allows things to be a lot more seamless, a lot quicker, and just generally a lot more frictionless than it was before. And I think when we've seen ecosystems like in India, in Brazil, and other markets that have gone live with this type of system and infrastructure, we've really seen payments take off pretty considerably. And so while we always talk about the opportunity for payments in Pakistan, and as you mentioned, SafePay is a portfolio company of ours, it will unlock just so much more growth in the space. And I think we're going to see a lot take off as a result of that.
We did a piece together, I think in 2023, speaking about how Pakistani founders kind of recalibrated post the 2021 funding boom and then crash, airlift being kind of the epitome of that. And it seems like before 2021, founders were kind of copy pasting the Silicon Valley way of doing things, which is not a bad thing. It's just kind of the only playbook that was available. But you were saying a new localized playbook is taking shape. Today, what are Pakistani startups' best practices, so to speak? And what best practices are maybe very different from the Silicon Valley narrative classic playbook that you would run if you were an SF?
Yeah, I think I think that's a really good question. I've talked about this a little bit on my podcast that we've mentioned that you've been really supportive of as well, because it looks a little bit more at pan emerging markets. And what I've noticed is that this first wave of emerging market startups that really kind of came up and has been coming up for a while, but there was really that copy paste mentality of let's take what's happening in Silicon Valley, let's be the Uber of X, let's be like the Klarna or the Affirm of X, right? And so kind of taking these models that were very much for a Western demographic, a Western audience where it was so different, and just kind of taking it in to these markets. And that's also, given the situation, in our markets where there's a lot of macro difficulties, where we've seen currency value devaluations and capital scarcity as a result of that. That type of Silicon Valley mindset of growth at all costs, and sometimes at the cost of bottom line, because you've been so focused on your top line growth and all of that, we just don't have that same luxury, right? So, to what you just said about 2021, 2022, of seeing this huge amount of capital that came into these markets, we just did a podcast episode yesterday that came out on B2B e-commerce, and we covered omni retail in West Africa and Chipper in Latin America. We actually talked about this, right? Where all of a sudden you're having to see these companies that are really kind of building then for the localized nuance of the markets that they're operating in. And these are very operationally complex spaces that we're solving for, right? And they do require a lot of capital, but when all this scarcity started happening, when money started drying up, the founders that really were able to survive and be resilient and adaptive within this were the ones that were able to not only adapt for the nuances of their particular markets, but also were able to do it for much less than what they were doing before, right? They were able to do it at costs much lower. Had to be much more focused on that bottom line. They had to think about margins a lot earlier. And so we've even seen that within emerging markets themselves, right? Because not all emerging markets are the same. And so even when we look at DealCart in our portfolio, which RO has covered before, which is much more focused on price conscious consumers as a B2C grocery play. When I did an episode between DealCart and City Mall in India, a lot of the realizations that City Mall just had the ability to, they had the luxury and the ability to have a lot more capital to grow. With City Mall is, raised a lot of money. DealCart didn't have that same privilege, right? Like while they raised or initially in that boom, the scarcity started happening, and they've raised about $8 million, but are actually on track to reach EBITDA profitability in the next 6 months, right? Which hasn't happened for other markets where you have a lot more capital, you have the ability to test more, you have the ability to fail forward a little bit more. Pakistan, just in other markets like that, Nigeria is probably similar, just doesn't have those same dynamics in those markets. And so I think, to that point, I think what we've now started to see in this next wave are these plays that are very focused and very nuanced for what they're building for in these markets. And so I actually see much more similarities amongst emerging markets with each other, of these playbooks that are happening, and they're also still nuanced, within those markets themselves. So I don't think you can take one playbook from Colombia and drop it in Pakistan, but I do think you have these founders that have been able to survive and hopefully still thrive while building for the nuances of their particular markets.
Before I dive into the next question, I'd just like to remind the audience you can ask questions to Kalsoom directly in the comments. You mentioned financing. One of the topics you highlight, or i2i Innovate highlights in their most recent quarterly report, is the use of hybrid financing. So not just equity anymore, but also debt, all types of different debt. Can you talk me through what different instruments are available to founders and which one are they using? And more importantly, as a VC, is it something you encourage founders to seek? Is it something you want to add to your own capabilities as a fund? How do you think of that?
Yeah, those are really good questions. I think you need affordable. I think affordable is a key word here. You need affordable debt in pretty much most of these markets, right? Because as these companies grow, especially fintechs, where they have to be able to lend and they need to raise debt in order to do that at some certain point, they need working capital. It can't be at these crazy prices, right? Or where the barrier to entry is so high that being able to get debt is very difficult. And so I think what we've seen is that markets that have done well, I think India is actually a great example of this. And a good friend runs Alteria, which is a great venture debt shop in India. We've been able to see venture debt funds come up in these markets. And in Pakistan, I do think that is a very big necessity. There are some options, and obviously with Hubble recently this past year raising, I think $58 million in capital, a significant part was actually from a bank, which to me is a massive signal in the market. Is the fact that a bank was able to provide debt, to me, is a really positive development. But we really do need, I think what's really missing is kind of the financing. While we have like some of our plays in the market right now, and including in my portfolio, are providing SME financing, which I think is great. The amount that they're able to provide is still relatively small. So we kind of actually need a little bit more of that mezzanine, that middle layer of like companies that need to raise that type of debt or that type of working capital financing that's necessary in order for them to grow. To the second part of your question, have we considered that? Yes, in short. However, we are not, our background is not debt ourselves. So we would have to basically hire a team or have people that have that background in that type of financing. And that's something that we've definitely considered. It's something that we've explored. And so, and I think that actually speaks to my journey with Invest to Innovate and then the fund in a nutshell over the last 15 years, is that we're often seeing these gaps come up in the market, and because there's no one there to solve it, you just have to solve it. And that's, spoke to why we built our accelerator program initially, our research arm, and then even the VC fund. TBD, honestly, if we're going to raise a debt fund, it's something that's very much something that we've talked about, or whether or not we raise, with our fund too, whether we have, a part of it that does do debt. But we do definitely believe that it is a massive gap in the market, and we would love for someone to solve for it. But if someone doesn't solve for it, then maybe that's something that we have to consider ourselves.
Staying on that funding topic, I spoke recently to the founder of iFarmer in Bangladesh, and what
Mhm.
he was saying was that um, while 5 years ago the Bangladeshi ecosystem's goal was to tap foreign capital, that was kind of the main priority, that has shifted a bit to mobilizing local capital sources and getting them into the VC asset class, which is obviously difficult. But in a context where international funding dries up, you don't really have a choice. Have you seen local Pakistani capital's attitude towards the Pakistani VC asset class change over the 5 years? And if so, how?
That's a good question. And I think we saw a lot of movement of family offices, especially kind of that next gen of because, Pakistan is similar. A lot of emerging markets have this, including Bangladesh, where you have a lot of these bigger family run businesses, right? And so what we were starting to see is these next generation of these family businesses being really interested and excited by the startup space and starting to act as angel investors. A few of them have come into a bunch of our funds. A lot of us have them as LPs. And then obviously one of the biggest examples was Fatima Gobi, which is now actually just running as Gobi Ventures, but really started with the Fatima Group and Ali Mukhtar specifically as like that next gen launching a VC fund. I think the challenge has been that, we had all this activity in 2021, 2022, and then we had a few big things that figuratively blew up as companies like Airlift, as you mentioned. But also, we had Tag. Obviously, there was a big stuff that happened at that company that raised a lot of capital. The funding dry up, and then we didn't see, and we didn't actually have really any success stories within that period because it was too short, right? It was almost like this romanticized like thing that happened really, really quickly and then faded away really quickly. So it was almost like you're in a desert and it felt like you could see the water and then it just kind of disappeared right off, like too quickly before we could reach it, right? And so for a lot of these family run businesses or people that were local capital, they saw the opportunity that was there, but then because the realized opportunity kind of faded before they could reach it, a lot of them were like, well, why would I invest money into local startups when I could put my money in real estate or the stock market and earn more? That being said, I do think that we're kind of, things are hopefully coming back. We're all part of like educating people about being local angel investors and all of that. And Invest Innovate, our sister company, is doing a lot of angel investor training. So I think there is still that interest and excitement, but I do think from what I observed as someone who had a lot of those, pitching to a lot of those family companies and those types of local capital, that interest kind of faded before it was able to really take off. And that also speaks to just kind of what was happening and how quickly it kind of came and went in our space. So I think you have to have a long-term view on Pakistan in order to be able to get into this. And I think that's what's important to kind of drive home as we're educating these investors.
That's super interesting because what Amar, the founder of DealCard, said in the RO piece was he felt like the momentum was cut
Yeah.
like in the middle of the ascent.
Yes.
And so it was really, really treacherous terrain to then, you're starting to get these angels interested or these family offices interested. A couple big failures happen and you have to start all over again. One of the more operationally speaking, one of the big international expansion corridors we're seeing at the moment for Pakistani startups is obviously the GCC.
Mm-hmm.
It's almost counterintuitive when you look at how different both markets are. So, can you explain to me two things? First, why are they going to the GCC? Second, you as an investor, are there some types of companies you say this is a good idea and others where you say this is not a good idea?
As in a good idea to go to the GCC?
Yeah.
Okay. Yeah. So, I mean, the GCC, pretty much every market around MENA right now. So, the one like Egypt has been doing this a lot. Like, wherever you've faced macro issues, it makes sense to go to the GCC because there's a lot of money and liquidity in that market, right? So, there's a lot of interest to invest in startups that are there. At the same time, I think that we've seen it's a very different dynamic as a market, right? So I actually think there's much more applicability between Egypt and Pakistan because the markets are quite similar in terms of dynamics, in terms of probably customer acquisition cost, but the value of what you're going to get. So, like as an example, Metric in my portfolio, which is a financial intelligence platform, and I think this is an interesting notion of like treating Pakistan as a kitchen or a lab. So like where you can actually test in Pakistan, be able to see kind of traction, that kind of customer behavior and early activity, and then say like if we're going to, but what Metric saw as an example is that while the most amount of activity was coming from Pakistan, the highest paying customers were actually coming from the GCC. And you actually see that in terms of average order value, in terms of the value of what you can get from a customer. It's a much higher paying customer in the GCC than it is in Pakistan, right? So Pakistan can be a really great testing ground, and then you can take it to those markets if it makes sense. So to the point of when I say yes to something versus when I say no, I don't think that every business that operates in Pakistan should go to the GCC, right? Because I also think some industries are very highly regulated, and fintech is one, right? So, and we have had companies of ours that have grown to the GCC that are fintech, and Abhi is one of them, but they did it quite smartly, right? They did it through partnerships, they did it through strategic investors. And it made sense for what they were building to build there. But the GCC is also quite saturated right now. There's a ton of activity happening there, a ton of businesses that are building there. And so if you are going to go there, as a company from Pakistan, the first question that I'd ask myself is, what does that competitive landscape look like? And what are you providing that is actually significantly different than what's already there, that you have an unfair advantage to do, right? And so with Pakistan, there is that value of also the labor arbitrage, right? So the kitchen or the lab, it's like you can actually use Pakistan as your back end, build your team from there, where it's a lot cheaper than it is to hire people in the GCC, as an example. And we're seeing that with Metric right now, and then be able to launch there. But like, some companies that are building, I think software plays are really interesting in the GCC. Consumer plays are really interesting for the reason that we just mentioned. But again, tons of competition there. So you really have to say, like, am I building something that's actually needed, that's different than what's being provided right now? And then how am I entering that market? So I think a lot of people are creating soft landings through players like 500 Sanibel. They're entering the UAE through Hub 71, which are helping you set up. So really thinking about it as, I'm not just going to go there, but actually saying, like, how am I going to enter is also a really much smarter way to think about it as well.
Going back to the kind of more macro, or actually this, the title of this session is called Beyond the Macros. And one of the common frustrations I hear from Pakistani founders, especially when pitching to foreign investors, is just this complete, very simplistic view of reading a couple bad macro stories and discounting the entire
Yeah.
market entirely. Obviously, the goal is not to diminish the operational complexity, financial complexity of operating in that macro environment. But can you give me some color as to um, maybe what is sometimes overstated in the impact of these macros? For example, I know Amar was saying, if you actually look, Egypt's depreciation has been way worse than Pakistan's over the last year, and you can't compare both. It's actually two very different worlds. So, what is maybe over indexed in fear of those macros?
Yeah. I think that, Pakistan always, I mean, I've literally, before I even started working in Pakistan 15 years ago, I was writing about Pakistan before that. So I think my entire career has been, if I could say one through line, it's been, how do we tell a different story than what's being told in the news about Pakistan? So since I was 24, I've been doing that, and so, which is 20 years basically, which is insane. And so when I think about that, Pakistan has always been, we've always kind of been on the back foot of like perceptions about the market, and that a lot of that is geopolitical, right? There's a perception about Pakistan that is there because of our place in the world, and how we're located and how we're strategically placed, whether it's how we're seeing it versus India, whether it's because of Afghanistan and the role there, if we go back to the 70s. So there's always been this sense of like us always having to over apologize or over explain, that, and it's exhausting, honestly, because you kind of wish that people would just see beyond the headlines. And so that's also the reason, to be honest with you, Tim, that when we started to do the research side of what we built with Invest to Innovate and started benchmarking the ecosystem, a part of that was because I was like, I can't keep telling warm and fuzzy stories about Pakistan, because that soft lens will only take us so far. We can only do it by telling kind of more number driven stories about what's happening. And it's not just us doing that. Data Darbar does really great work as well about this. And so I think, there are a lot of risks still, because there are things that are completely out of our control, right? Like, so as an example, like the internet slowdown or the bans of TikTok, right? These are massive marketing channels for companies that are in Pakistan. The internet shutdown actually really impacted freelancers and software plays, where people are like, well, why should we outsource to Pakistan when, that's a potential risk? And so what I always say to, government players and regulators, I always think, I'm like, my standpoint is do no harm. Like, please just get out of the way, because if you continue to build, if you try to over policy things and you try to over regulate this space, you will continue to just act as a ceiling of this. However, founders in Pakistan will always find a way around things, which is why I really believe that founders in any emerging market, and Pakistan to me is one of the best examples of that, are some of the most resilient founders in the world, because they are constantly having to hack and find their ways around these things, these walls and these barriers that keep being put up. So I think there are very real risks, and I think it's important to not acknowledging them is actually being delusional in my mind, right? You have to talk about them. And at the same time, you have to show examples of like, this is how this company is continuing to perform. And this is how this company has actually navigated around what's happening. So even during the global slowdown, the macro slowdown that happened in Pakistan, we actually called it, pundits called it a polycrisis, right? In Pakistan, because it wasn't just macroeconomic, it was also political. It was a number of different things that were impacting the market. A lot of companies in Pakistan actually, that's when they started moving to the GCC. And we saw that with our portfolio, right? With Abhi as an example, they launched in Saudi, the UAE. One of our companies, Thaza, pivoted significantly and actually became much more of a model that was more in the logistics drop shipping space, focused on the Middle East. So like we saw these pivots happen. But to me, what I always say to investors and to LPs, I'm like, this to me is an example of the kind of resilience and the DNA of founders in these markets, is that they don't just sit back and allow things to happen to them. Because to me, that's a very victim response. Instead, we're actually quite activists in how we think about how to navigate and how to adapt to the challenges thrown our way.
Changing topics completely, but I want to speak about gender equity in the Pakistani ecosystem. You're obviously I think all four i2i investing members are women. Pakistan has very visible, really good female founders, including Maha from
Mhm.
Buskaro, which is one of the most incredible stories I've seen talk about resilience. How have you seen the role of women in the Pakistani ecosystem evolve over the past 5 years, and what remains to be done?
Oh my gosh, so much more needs to be done. I think the challenge is, so we are, yes, a female-led venture capital fund. Our investment committee is all women. We don't only invest in women. 30% of our portfolio is that, but it is also hard. Like I would actually say that um, venture capital as a space is quite a weird asset class, and that it's so high risk, and the type of businesses that we're seeing run by women are often not a fit for venture capital. And so I think that's been tricky from my side, right? Is like, how do we actually source and not invest in people because they're women, right? Because I would hate that. I would hate for people to only invest in me because I'm a female fund manager. But I think pipeline is a major challenge when it comes to that, but also supply of capital, right? Like we actually need more types of capital that should exist, revenue based financing, what we said before, working capital, debt. Because I think a lot of women led companies that are really exciting in the market are a lot of SMEs, which I think are really interesting, are probably going to be better from a growth standpoint than some of these VC plays that we're seeing. But because I operate in that asset class, most of them are not a fit for what I invest in, right? And so I do think that we've seen a lot of really exciting stories of women-led companies in the market. But I definitely think that we need to see more. And I think with the slowdown that's been happening, when you look at the numbers, I think Maha is a great example of someone who's managed to still raise capital. We obviously have like Sahith Kahani. We have a few female-led companies in our portfolio, including Metric, which was co-founded by Mina Tariq and Halima of Iran. But how can we have more of this, right? Is my belief, is like, how can we increase the funnel, and then also how do we actually increase the supply and have more diverse. I'm proud, I guess, that we're the first female-led VC, but I'm actually not proud that we're the only ones right now. I would love to see more women in this space, and I love that there are women that are at other VC firms right now. Kashif is at Gobi Ventures. We have someone at Laxon, Aisha, so seeing more women come up, Ilya on our team has been part of our team for a number of years, and seeing more kind of mobility of also women into higher positions in VC and at investment firms, I also think is helpful for that too.
I think you're part of probably globally, and you're part of Kaufman, so you've probably met a lot of others. But these kind of GPs who raise one of the first big USD denominated VC funds for their ecosystem specifically, say 5 to 10 years ago, a lot of those managers today are obviously reckoning with the fact that they took a VC model that was used in the US, took it to their market because that's what LPs were demanding, and reckoning with the fact that the economics, especially in terms of exit and timeline, not necessarily quality of underlying companies, doesn't always fit the 10+2 kind of cookie cutter approach. How do you think of that, especially as you, I assume, are going to stay in the space, going to raise other funds,
Mhm.
so have to pitch LPs again? For example, how are you approaching that topic with your LPs?
Yeah, and I mean, some funds and Baksan, I know that you've had Sai on RO, but also Gobi thought about this, right? Of having like a local PKR denominated part of what they built, right? So that it wasn't just like dealing with some of the devaluation concerns of like companies that then, had their revenue slashed just because of the devaluation that happened. I think that yeah, I agree. I think that right now VC for emerging markets is still relatively, it's kind of still unproven in a lot of ways, right? I think you have really great examples. And, Alan, I know you've met Tim. Endeavor is a great example of this, right? Of a fund that is a great example of the opposite, right? Which is a fund that's had a number of unicorns in their portfolio, have really been out there kind of beating the drum that emerging markets really can be where innovation is taking place. And I think I look to that as like inspiration, but it's harder when you have like, there's so many shocks to economically to every market that you're in. And there's so many things that are just out of your control, right? So I would love to be a little bit more creative as a VC in terms of how I think about our fund structure as an example, right? Like I think it'd be cool to think about an evergreen fund that wasn't just time-based, but actually just raising and continuing to invest. But LPs, the limited partners that invest in funds, are actually still quite traditional. They actually, even if you sway a little bit off of the 220 model, which is your management fee being 2%, your carry being 20, they hate that, right? It's like if you're 2.5, they're like, why are you 2.5 and not 2, right? So when you are trying to be creative because you're trying to adapt to your market realities, sometimes LPs are not quite there yet. So you're kind of constantly trying to retrofit yourself to like say like, okay, how do I achieve market rate returns as a VC and do it for these markets, which actually can be quite volatile in what they're building. And so I think it just requires you to just constantly be as adaptive and as resilient as your founders are, right? And we've had to adapt for that, like where we started to look at companies and this is how we're thinking about, as we're building for fund two, it's like, can we think about Pakistan as this nexus point of like not just companies that are building for Pakistan, but maybe Pakistan for the world, Pakistan for the region, and thinking outwards, or like companies that are building into Pakistan. Like, how do we mitigate the risk here so that we can actually really have distributed risk in our portfolio and really think about how we can achieve those returns if our LPs maybe it won't be as creative with us. And I think, I don't know if I answered your question, but this is a question that we have and we chew on constantly. I actually spoke about it with Alex Lazaro on a podcast episode I did for the Comparable a couple episodes ago. And I think we talked about it quite openly of like, how do we think about sectors and spaces and structures, because emerging markets are so different in as a beast, right?
I want to speak about foreign startups because you mentioned foreign startups coming to Pakistan potentially in that investment thesis for Fund Two. What's the what's the status quo today in terms of foreign startups coming into Pakistan? I know at some point Zoot came in and acquired a
Yeah.
local fintech from Uzbekistan. I know Central Asia is looking to Pakistan as potentially actually one of the big domestic markets they can attack after smaller Central Asian ones. What's the activity you're seeing on the foreign startup coming into Pakistan? Are you seeing GCC startups doing kind of the opposite flight and coming into Pakistan?
Yes. So we've seen activity, right? Especially, so not even just Pakistan, but as an example, like for Shop Up in Bangladesh, obviously there was like a major part, was it Sari, I think, in Saudi that invested or did a strategic investment in them. They attempted to do something similar in Pakistan recently. There's definitely been rumblings, right? Like we've seen B2B commerce plays and other similar emerging markets look at Pakistani startups as a way to maybe come into the market. During that 2021, 2022 growth, we had a lot of Egyptian startups that were looking at the market quite significantly that, obviously now everyone's focused on survival. So I do think that we are going to see that happen again. And that's a little bit about our personal hypothesis is that I do think that Pakistan is it's a huge addressable market, right? Or it's a huge market and the addressable market is getting increasingly larger as purchasing power increases, as things like Ross go online. So we are going to see Pakistan as an opportunity increase. And so my hypothesis is that as hopefully things stabilize regionally. I think we will see more of that. Obviously we saw the acquisition of Pay by Papara, but obviously that's a Turkish play, but obviously that had its own own issues that came up on the Papara side that impacted it, but that would have been a great signal for the market. And it still was, I think, in some ways, because it's a great example of a company that was like, let's enter, but enter via another player. And I think you will see that, especially with fintechs, right? Because the license can be quite extensive, quite expensive. And so rather than a player wanting to just come in and do it themselves, that why not come in via a fintech play that already has a license in a market, right? So I do think that we'll see more fintech style plays happen like that, of that outside in happening. And so I think as more and more emerging markets realize, I think, the similarities amongst them and the dynamics of those markets that are quite similar. Like I've been actually blown away by how similar I've seen, and this has been through my own podcast, like how similar Latin American companies are to our markets, right? And some of the dynamics there. And obviously LATAM is not a monolith, but like seeing things that are happening there, I'm like, wow, I wish what's happening here in Brazil, we could just bring it to Pakistan, or they could just enter or partner with those players. And I also think that, and that also speaks to kind of also the beauty of plays like Endeavor, where they've built this community of entrepreneurs across emerging markets. So hopefully we'll see a little bit more of that connectivity happen in the future.
We have a great question from the chat from Mohammed. You touched upon this topic at the fund level, but what he's saying is that a lot of Pakistani startups have USD denominated software costs. So, for example, I remember SafePay saying their Visa MasterCard fees were in USD, but they are making money in a volatile local currency, which obviously has stabilized, at least compared to other markets, but it was pretty bad a couple years ago. What are some concrete ways some of your portfolio companies have dealt with that local currency revenue, USD denominated software costs?
Yeah, I think because of the holding company legislation that happened in 2021, a lot of our companies and most companies in Pakistan that have raised capital have set up holding companies abroad. So typically what we'll see is like companies will actually, and while that is, you have to have an operational a company that's operating in Pakistan that's linked to your holdco, but a lot of our companies will hold money in their holding company, right? And so some of those costs can be mitigated because it's still being held in USD over there. So they can take care of some of those software costs there. It doesn't really solve the problem of like, you have PKR happening over here, but it does help that you can hold some of your money still in your USD account outside of the market, or like in Singapore, the UAE, Delaware is where a lot of people are doing it. So that's what I've seen really happen, where companies are being able to do that. Yeah, I mean, I think like, with some companies being able to like, YouTube now, like this is so dumb, but like things like this is more consumer, but I was thinking about this with Netflix now setting up in Pakistan, having a Netflix account in Pakistan and PKR is way cheaper than if I was to have it in USD, or like a YouTube premium, right? It's cheaper to do it in Pakistan than it is to do outside. So things like that, where they're setting up, where these companies are having localized versions of it, where you're paying local prices, and local is better. But I think for everybody else, it's kind of having that whole outside is what I've seen.
Okay. You spoke about one of the best things regulators could do was kind of stay out the way and let people build. But there are some very burdening regulations that have to be changed. So I think, for example, I don't remember with who it was, but a Pakistani founder told me that when they started, she was taxed on GMV, or they were taxed on GMV and not revenue, which obviously makes no sense.
Yeah.
What are some big positive, or maybe less positive, policy changes that have happened in the last couple of years that will have a big impact? I'm thinking about fintech regulation.
Yeah.
What about it?
I mean, generally, the state bank has been quite progressive, right? So I think even now there was a sandbox in place for people building innovations in the financial services space. That's allowing startups to actually test innovative products like stablecoin related companies and all of that are coming up within the sandbox. That's interesting. So state bank actually for a while has been actually quite progressive. I would say like 2021 on. So we've seen that's really where we saw the fintech space take off, honestly, because the barriers really came down in terms of barriers to entry for fintech came down in around that time. I also think so the Securities and Exchange Commission of Pakistan, SECP, and the State Bank actually have been quite progressive regulators relatively over the past few years. And I think we've seen a lot um, of them being able to speak to one another and seeing things take place. Where we haven't seen it is, and to your point about being taxed on GMV versus revenue, these are some of the I don't want to say crazy, but it is quite crazy things that were coming out of FBR, which is and they're being directed, right? So it's not like they're coming up with policy, but like that to me is the taxation regime in Pakistan is actually still one of the more backwards things that I've seen that has really held back the startup space in the market, the fun stuff that's been happening. And so I think that's really where we're seeing challenges even right now when it came to like the e-commerce tax, or when it came to, there was a big thing that just happened where fintech, like payment providers or people that were working with merchants, like fintechs working with merchants, would have to collect taxes on behalf of the BR. And it was like all this stuff where it was like, why are we doing this? Like this adds just so much complexity and just adding on to these companies versus being able to ease them. And part of that is related to the IMF facility, right? Because there are certain things that the government is trying to put into place from a reform perspective in order to be able to continue to get money from the IMF and the facility and some of the milestones they need to reach. However, I do think that we can still do things that don't hurt the space, and and instead think about ways to help it. So that's really where I see the major gap. But honestly, so many things that have happened with the security, SECP has had their own sandbox, SBP has their sandbox. The holding company legislation was a game changer in 2021. Generally like fintech regulation and stuff around the licenses has been really interesting and exciting. Things in theory, like the digital banking license that came about was great in theory. Not so much maybe an implementation, but I see things that are trying to be reversed now, or trying to like help fix some of that. So I do think there's been some really interesting things that have happened on that front.
You've touched upon it, but can you dig just a tiny bit on the holding company regulation, what it implies? Because I know it's a massive topic amongst a lot of other ecosystems, and I'm especially curious to know how it ties to potential capital controls that Pakistan might have, which is always a touchy subject. How
Yeah.
did the proponents of the legislation kind of get around that?
I think it's because of the way that it's framed, right? And much better people can talk about this than me. My partner, Miss Bush, should actually have been a lawyer, so she could probably explain this even better than me. But the reason why this is important is because before, and the reason why I think it unlocks so much, I think it's important for people to understand, is that prior to the holding company legislation happening, which was the result of a working group of players like my partner who were on it, that were really pushing and advocating for something like this, is that a lot of international VCs, if they were to put money into Pakistan, the question of how they get their money out, a lot of questions around some of the controls around that were like big risk related questions that would actually prevent investors from doing that to begin with, right? And so it just so happened that the holding company legislation really, and so when startups did set up entities abroad, it was done so it was more like ask for forgiveness rather than permission. It was kind of the mentality before. The holding company legislation just opened things up, and it just happened to be during that 2021, 2022 period where there was a ton of capital starting to flow to those markets. And so it just timed well, where a lot of money then could flow in. It really does. You can't just have everything held outside the market, right? So that's really where that holding company, it allows you to hold the money, but really has to flow into the market through this operational company that you have on the ground. And so it really is, to the capital control part of what you're saying, it's like you can't just have everything sitting outside the market. You have to have an argument for, your company being operating in the market, and how you're paying your people there, how you're doing operations. So I think a lawyer can probably speak a little bit better in terms of the percentage, but it is set up so that the way that it bypassed it was that it's like it allows money to come in still to the market. You're still making that argument, but it allows it to come in. The argument was that we will allow more money to come in because of the legislation, but it will eventually flow into the market, which is what was the most important thing for the regulator.
Via the podcast you run, the Comparable, you have looked at a ton of different pan-emerging markets, what are some countries that you think are 5 to 10 years ahead of the Pakistani ecosystem, and what have they done that Pakistan can do today to kind of get to where they are?
Yeah. Oh my gosh. I mean, and I don't know if this is okay to say for this audience, but India really is like not even 5 to 10, I would say 15 years ahead of where we are, right? Like everything that has happened. And I think it's actually a shame when people don't look at the Indian market from Pakistan as a comparable because the markets are obviously, we were once one market once upon a time. So the dynamics of some of them are quite similar. And we saw this in the episode that I mentioned with Deal Cart and City Mall. It was like we could have been talking about the same type of consumer base, right? But I think with India, they've had, their version of Ross went online a while ago. They've had also a ton of local capital. Like, so when capital scarcity happened globally, India wasn't tremendously impacted because there were so many local funds that had been operating that continued to operate, right? Continue to invest in startups in the market. We just saw like they just had a lot more time. So we're seeing a lot more unicorns come out of India. We're seeing a ton come out in China. So those markets to me are not even, they're so developed as ecosystems, right? There's just so much happening in terms of activity, in terms of, competition that's happening. So as a result of that, you're seeing companies that have survived and also companies that are no longer around. So I think what I think is important for Pakistani startups to look at when they're looking at the Indian market is not just playbooks, but also cautionary tales, right? So we've also seen, because there's been a lot more time that's happened in India, we've also seen a lot of companies that have figuratively blown up, right? Have not survived. And you can also see why. At the same time, you have to take into consideration that India has a lot more, there's a lot more liquidity in that market. So a company may just be not have to be profitable until their Series B. We don't have that same luxury in Pakistan. I think when I've been looking at Brazil, I think I've been Brazil to me is like such an interesting market. And in my Kaufman class, I have 3 other Brazilian VCs, and just like speaking to them, I'm just like, wow, if we could learn so much from what's happening in the Brazilian market, which I think Brazil has one of the most exciting fintech spaces in all emerging markets, right? And we've seen plays like Pagaliv, which is a buy now, pay later. It's coming up in the next episode for us. That's been really just built off of Pix, right? To that point. So we've just seen so much activity happen in that market that I find just interesting. And again, a lot of local funds that have been operating across Latin America. And I think with Pakistan, we only have 6 local VCs, so 6 Pakistan focused VCs. And then out of them, I think only 3 are raising their fund too. So we do not have enough capital for our market, right? And we only have capital that's really kind of at that early stage. We need more capital at Series A. We need more growth stage capital. And so Pakistan is just, we have so many more things to do. And we definitely need some wins in the ecosystem to attract more capital in the medium term.
We have another good, pretty technical question from the chat. I don't know if you read a recent Forward Start piece. I don't know if you know that newsletter, but
I do. Actually, you told me about it. So
yeah,
I subscribed to it after that.
awesome. Well, JV just published a piece on, I think it's a linked project between Saudi and Syria to lay undersea cables for internet. In the context of growing internet penetration in Pakistan, who's building the internet infrastructure, and are there any completely private initiatives? So Starlink is the easiest example to come up with. Like, who's building the internet infrastructure in Pakistan today, and is it going
I'm
fast
not the
enough?
person to answer this question. I don't know. I do find it funny though that when the internet slowdowns and shutdowns were happening, you can always see the news headlines like the government blaming it on sharks that were eating underwater cables, and I always found that really funny. I was like, obviously that's not the reason, right? There's like some sort of security reason why this is happening. Let's just own it. But I do think there has been, I mean, a lot of people can probably speak to this a lot more educated than I can. I don't know who right now is building more of the internet infrastructure, but I do think that there is a huge amount of opportunity to do that when it comes to internet penetration in the market. So I do think that right now, I think it's increasing pretty considerably, and especially obviously compared to before, but there's a huge amount of opportunity to continue building for that, and privatize that would love to see those types of initiatives. So maybe people in the chat know more than I do about it.
This is going to be a horrible last question because I'm asking you to pick between your children, but
Oh
if you
no.
were to pick one Pakistani founder or company you're really, really, really excited about at the moment, and that someone who is not familiar with the Pakistani ecosystem should start with to kind of grasp the opportunity, but also the operational complexity of building there? Who would it be?
Oh my gosh. Well, first of all, I really can't pick I can't pick a favorite. But if a company of ours in our portfolio that's probably part of most people's portfolio at this time is Abhi. And I think the reason why I'm not picking them as the best, right? Because I obviously like Deal Card is amazing. SafePay you mentioned earlier. He actually just released a really great podcast that is out on TBT, Thought Behind Things, which I recommend everyone listen to. It's 2 hours, but super great. Metric I mentioned, all of them are great. The reason why Ubhi I think is a good one to really look at is because there's been a lot of firsts for Ubhi in the market, which I think is really interesting. So they were the first to raise so thinking about debt, right, and the need for debt in the market, they actually went and raised a sukuk, which is an Islamic bond. They were the first fintech in the region to do that. And they did that locally, raised local capital. And so they kind of became like a really great case study for how to do that, right? They went and got their Bakra rating, which is, the rating of them as a company in order to be able to go out and raise the sukuk. They had an A for that. They acquired a microfinance bank, Finca, which is now Abhi Bank, and are now really a neo challenger bank. They started going to the GCC quite early. And actually, if you've met Omer, who's the co-founder of Abhi, that was part of their day zero vision, was that they were never going to be a Pakistan only play. And I think that's helpful because Omer, didn't really grow up in Pakistan. He kind of grew up everywhere. And so he's had a very pan emerging market mentality because he's a very much a third culture kid like myself. And so he's always kind of had that vision of like, this is going to be a multi-market play. He's seen that happen in other emerging markets. And he was like, this is how we're going to do it. He knew that in order to raise growth stage capital, he would need to go to the GCC, but doing that would unlock his ability to go to other markets. And they've also like been very honest about what they've tried and not done. They also had like their hook product was earned wage access, but now they're also doing SME financing, payroll, remittance. Like he always thought about this as like a Marvel universe of financial products. And the way that they've built has been very deliberate from day one. So, and also very much like we need to break even. We need to be a company that isn't focused just on top line, but really focused on bottom line from day one. So I think he's a great case study of like all of the things that founders should be thinking about from day one. Not saying he's a favorite, but he's probably the company in our portfolio that is the furthest down in terms of where we invested to where they are today.
I do have one last bonus question, which is a bit more fun and less treacherous. I'm a I'm a third culture kid, Pakistani in the diaspora, 10 years in finance. I've gone to a couple Pakistani startup conferences. I want to launch a VC fund targeting Pakistan and maybe the wider region. How do I structure the fund? So, like, if you were that person today, what's the fund size? What are the fund terms you're trying to get? And what's the investment thesis?
So let me ask qualifying questions. So you just said you're Pakistani diaspora. You've been working for how many years?
10 years.
Do you have investment experience?
I've been doing investment banking for the past 10 years.
Yeah, no, that doesn't count. Sorry. I was like, as many as like, there's so many investment bankers that want to launch funds. And I'm like, dude, unless you have, so number one, raising a first fund for a market like Pakistan is extremely hard. So like Miss and I always talk about this, my partner on the fund, that like we checked all the hard boxes, right? First time fund, Pakistan is still an unproven market. Women building a fund. So we're like, check all the hard boxes. If you are someone that is Pakistani diaspora, 10 years of experience, but in investment banking, want to launch a VC fund, my first question is, what is your differentiated thesis? So like, what are you doing that is not only different from other VC funds in the market, because you will be competing for the same funds that all of us are doing it. And I want you to be there because I want more funds in the market. But what are you doing that's different? Number two, what is your value proposition that would make you win a deal better than than the other funds that are in the market, right? Like, what are you providing to a founder that is differentiated, right? Is it your network outside of the market, which maybe you could leverage? So really thinking about what your superpower is and how do you leverage that in building a fund. I think first time funds for the market, we've seen such a range. I mean, we had a $10 million fund for fund one, so quite small, but like that's actually quite, I think sizable for a first time fund comparatively. But we've seen other, I think Atif for Indus Valley, his first fund was like, I think 30, I want to say. He's now raising fund two, which is bigger. But he was Fox on a Diaspora, LinkedIn, but also a pretty prolific angel investor, right? So really kind of got in the market and started doing it that way. So I would also build a track record early and actually start angel investing with whatever money you have, and then build that track record in order to go out and raise a fund. Because I think a lot of people will say, like, you don't have a track record, even if you've been an investment banker. So I think it's important to show that investing in this market is such a different beast, that you have to be able to show some sort of track record before you go out and do it.
Awesome. That was my last question. Thank you so much, Kels, for your time. We'll end on those
Thank you
wise
for having
words.
me.
Yeah, of course. Talk very soon, and thank you to everyone who attended.
Thanks.